Everyone, this is Matt over at WallStreetLiveChat.com. Sitting here on a Saturday morning, trying to figure out what the Dow is going to do next and where the market's going to be going in the future. So I did a little layout to help everybody out who's been asking a few questions about QE and this, that, and the other thing, mainly on our website. But I figured I'd share it with everybody for those who have no idea. A little bit of history since 2008. Fall off. Huge drop from 14 down to 6. Let's talk about what the government did. So what I did is I laid out basically a timeline. So the 2008 financial crisis, slow growth and high unemployment forced the Fed to stimulate the economy through its policy and quantitative easing. In the interval of November 25th, 2008 through June 2010. The program had a little impact initially, so the Fed announced an expansion of the program from $600 billion to $1.25 trillion, and that was in March of 2009. Immediately after the program wrapped up, trouble emerged from growing crisis in Europe. So we had more instability in the financial markets. So the Fed moved with a second round, and which was known as QE2, and it involved the purchase of $600 billion worth of short-term bonds. This program, which Ben Bernanke first hinted at in August 27, 2010, ran from November 2010 through June 2011. QE sparked the rally in the markets and did little to spur substantial economic growth. Okay, so far we've dumped, here's this rally here. So far we dumped all this money in, and it's still not building the economy that they were hoping for. A plan to purchase to $85 billion in fixed income securities per month, $40 billion in mortgage-backed securities, and $45 billion in U.S. Treasuries. So they're spreading their wings. Unlike QE1 and QE2, the current program has no set date, and it's just going to keep continuing. So finally, last week, Ben announced, not during the Fed minutes, they said in June we were going to start to taper off. They were going to start to taper off the whole program. So what's that mean? That means, we're going to head south, and rightfully so. There's nothing left out there that, is going to keep us going. It's just a matter of this whole area here has been because of treasuries, bonds, and trillions and trillions and trillions of dollars going into everything. So it's coming to a head. It's kind of odd how it happens on the way I look at it from a technical standpoint. If you take a trend line from where we are, from where we were, let's do it this way, from where we were to where we are, okay? Taking the top of these candles. All right, and this is monthly of the Dow, as you can see down here, 2006, 2007, 2008, so on and so forth, okay? If you see the solid wick we have at this peak here, okay, and then it started dropping. We have a wick here, and then it started dropping. So it looks like there's going to be a couple months of channeling, just like here, okay? Just like here, 2 months. And it looks like we're going to get the same thing here, 2 months. And we're going to be at this upper trend line. Okay, so what happens? Are we at the top, or are we listening to all these stations saying, we're going to 20,000, we're going to 20,000? From a technical standpoint, in my view only, now is the time to take your money and run. Start getting into something safe. If you're long in this market, I would wait for a better entry. I would take your profits because you've been buying over here at this double bottom. You haven't, or this double bottom, or this double bottom. You have not been buying up here. And if anybody's telling you to, they're silly. That's my opinion from a technical standpoint. Okay, QE's ending. It's that simple. Okay, we are in really not much of a better position than we were. I think it's all a big, I mean, I go around my neighborhoods, things are for sale, things are foreclosed. You know, it's the same thing. Businesses in areas are all closed down. I mean, there's nothing, it's not like it was back in the day when every building was full. There were all kinds of businesses and shops. It's not like that anymore. So this whole run-up has been great for the rich. I mean, it's true. Great for the rich. You know, and if you're a part of this whole thing, but I think it's time to start considering, you know, your alternatives. You know, do you take your profit, start getting into safer securities? You know, here are your indicators. If you take a look, you know, just at, you know, let me extend this volume bar, okay? Look at your volume, all right? These two candles, look at you had 10 billion worth of buy-in. And the next day you had, next month you had 7 billion in buying. The one right after that is 6.7 billion. You had 3 candles at this bottom, okay? Billions and billions of shares. But look what's happening now, okay? Ever since the market's been ripping to the upside, all right? Look at what we're doing. Slowly but surely. Okay, slowly but surely. Volume's decreasing. And guess who's selling to anybody who's buying? Yeah. These 3 months worth of people. So any buyers that are coming in, these guys are cashing out up in this area and all through here. It's the greatest exit program ever. It's not us. We don't have the billions and billions of dollars. We're day traders. We're flippers. We're you know, short-term swingers. We're trying to take what we can out of this market. All right. What are we going to take out of this market? Anything we can. You know, so do we look ahead, you know, on the drop? Where are we going to go? Where's the drop going to be? You know, that's the hard part to figure out right now. You know, are we at our top? I'm going to say, you know, one more month takes us into June, right? And that's a double top. Okay, we have a little bit more to go. 16, maybe 16,195 is what I estimated on another chart. Okay, that would be the perfect, in my opinion. You know, your Arun has been riding the top, all right? Now we want a slow descent, okay, like we did over here. We want a slow descent, okay? We don't want a rocket descent, like, because you know it's only just only know it's a spike, all right? So the Arun's going to come, the red Arun's going to come back down to the bottom, okay, which is your 14 down, and after that, then they're going to start getting jiggy and cross and start heading the other way. You know, your money chalk and flow, you know, it didn't pick up, all right? The money didn't pick up in this area, okay? Your money is picking up here, okay? If you see that, it's much more rapid than this slow decline. Your relative strength index is at 73, all right? If you guys know all these indicators, you know 73 is way overbought, okay? People know it, all right? The big money people know it. That's why the volume's decreasing the way it's decreasing. I just showed you, right? They know it's getting to its top. All right, so the downside, what are we looking at for a downside? Well, is it going to be a big downslide? Is it going to be, you know, is it going to be huge? Is it going to, you know, is it going to come into this area right here? I would suspect that it's going to, and I'm making an aggressive call here, and I know that there's 2 options, okay, in my personal opinion. All right, we can either come to this bottom, which is this bottom, which is these bottoms. Okay, this is what we're going to come to a 10,000 flat, and then start moving to the upside. Okay, so I'm going aggressive. Yeah, it's 5. I mean, you have to. This is the way I'm looking at it. It's either going to be 75 area or 10 area. Okay, that's what I'm thinking. and it's going to be monthly, and it's going to be slow and steady. So maybe by the end of next year, it's going to be, or a year, June of next year, somewhere in that area, we could be in this area. Okay. No, and this is just what I'm predicting. These moves are big moves ever since back here down in 2001. All right, you're talking about this top, which was say 12,000. We'll estimate it. This bottom here, which was we'll estimate the bottom. Now let's say 7. So 4,000. Now you go to the upside. You say 7 to 14. Which is 100%. Now you're going to take here to this downside, 14 to 7, that's 100%. 7 back up, but we're a little bit higher this time to 15. Okay? So it's just a strict pattern that you have. It's just a pattern. Now, are we going to lose half of this, which would take us to 75? Folks, yes, we are. Okay? Because we're no better off and no different than we were here, 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 or here. And that's the reality of it. If anything, we're in a worse position because of what the government has done and what the banks have done and what businesses have done and corrupt organizations have done. Okay? We're probably in the worst position ever. So do I say we're going to lose half its value again? Absolutely. And that's my take on the Dow. I mean, it is what it is. It's a technical look. It's not listening to Wall Street. It's not listening to these guys on TV. It's not saying, one day's wonderful, one day's not wonderful. It's not a matter of that. Look at the facts. Look where we are. Look at the time frames. Okay, you had a big move from here to here, from here to here, from here to here. Now we're up here. Okay. QE stops, they shut off the money flow, guess who's going to get scared? Everybody who has money, the big boys. Okay, so they're going to stop peeling. And they're going to peel while all the CNBC and all these other stations, everybody's saying, the money's on the sidelines, now is the time to put the money in. If you're putting your money in right now, you're absolutely out of your tree. But, hey, you guys do what you want to do. I was sitting here aggravated. I was looking at all the charts, all at 72 RSI, 80 RSI, 90 RSIs. I mean, these things are just relative strength index and money chalk and flow. I mean, they're just out of control, and it has to stop somewhere. And I tried to figure out. So the reason I did the video is because I think we're getting very close to start the downtrend. We're very close to start the downtrend, and I'm calling 7,500. And whether it's a year or 2 years or 3 years that it's going to take to get there, it's going there. And you heard it from me, Matt over at WallStreetLiveChat.com. Enjoy your weekend.